Good morning, everybody, and welcome to today's Morning Coffee with Mike. I've got the French press here, and we have a very important and interesting conversation for you guys here. Just let me bring this into view a little bit better as I push this down. Coffee's just so much better this way, and I've been missing out for a while. So we have a very interesting conversation for you guys today. And today's conversation is going to be all about how you guys can make some fuck you money in the market. Basically, this came up from Elon earlier this week. Elon Musk told certain advertisers that they could go fuck themselves. And the reason why he told them that was basically because certain advertisers told him that unless you stop saying things that we don't like, we're going to take our advertising dollars away from you. Apparently, that was Apple, Disney, and a couple of others. And so this was Elon's response. Unless Elon has enough money where he doesn't need to worry about somebody saying, oh, I'm going to take money away from you and you're going to do what I want. So does X. He is positioned to tell bullies to basically go fuck themselves. And the question of today is, how can you do the same? How can we walk a similar path? Well, perhaps we're not going to make Elon kind of money, but we can turn a little into a lot. And the market is a great equalizer, right? So how can we use the market to help us have some of that types of fuck you money? To do this, you're going to need to think differently. You're going to need to think differently. And I just realized that my microphone was off for a bit, but now it's on. So hopefully you guys over there on YouTube can hear this. And I might need to re-record this later on. But in order to have your own money tree, and in order to turn a little into a lot, you need to think differently. And this is how. You may have heard that you should listen to the news and read 10Ks, make forecasts, and attempt to predict where the market is headed. That's all bogus. You don't need any of that. What you need is to listen to what they say, sure, but watch what they do. Here is how you're going to watch what they do. And it brings me to my principles of watching, interpreting, and profiting from the market and doing that consistently. Here's what I do, and here's how you could do it as well. What you want to do is get a 3D view of the market by looking at it through 3 different lessons, namely the general market, your system, and your personal performance. Those 3 combined are going to be able to give you the best overall view of the market, see what people are actually doing, and be able to respond in time. Here are some of the things that I personally look at for the general market overview. I'm looking at what the major indexes are doing, and I'm looking at them not just on 1 time frame, I'm looking at them on 3 time frames. Here are the indexes that I'm looking at, and there are the time frames that I'm looking at. I'm looking at the S&P 500, the NASDAQ, Russell 2000, New York Stock Exchange, and the Dow. I'm looking at daily, weekly, and monthly time frames. And the reason why I'm looking at all this is so that way I could capture the early breakouts, the earlier turns that we had in the beginning of November, right? So if we're looking at the market, and I'm just going to bring the daily charts over here for a second, bring this over here, right? So here's November, right? So end of October, beginning of November, and here's what happened in November. You're not going to be able to see that if you're looking at, say, a weekly chart. Here's a weekly chart. You're way down here. The market looks like absolute garbage. It's falling off a cliff. As price is starting to rally, you're not seeing that. You're just seeing a whole bunch of overhead supply. You zoom out even further and look at a monthly chart, you're way down here. You need to keep all time frames in perspective, and that's how you're going to be able to catch these earlier turns. But you don't want to just do that on one time frame. You want to do that on all the time frames. You want to do that on all the different indexes too. That way you're getting this multi-dimensional perspective of what people are actually doing. Next, you want to look at the data within each one of those indexes and timeframes. You want to identify which way the trends are moving. You want to look at the number of distribution days. If there's been net selling in the market, same thing too. You want to see if there's been net buying in the market. You want to take a look at the number of stocks that are actually making fresh 52-week highs or fresh 52-week lows. Stands to reason, right? If the market is making higher highs, then the stocks within them should also be making higher highs. So for example, let's come back to our chart right here. So as the market is rallying, you would expect there to be less stocks making fresh 52-week lows, wouldn't you? I sure would. And as the market is moving into new highs, you would expect this to at least begin to see the number of stocks making new 52-week highs increase, right? Stands to reason that if we don't see those internals, then something could be afoot. Something could be off, where perhaps we want to be a little bit more cautious. All things that we're able to observe, all things that don't require you to be an accountant and to be searching through the news and basically acting like this, right? That you don't need any of that. What you need to do is to watch what they are actually doing and looking at the indexes, looking at the trends, looking at distribution, new highs and new lows. All those things can help you in real time. But that's not enough either, right? That's just one lens. That's just this lens here, right? This is just one lens. We want a three-dimensional lens. That's what's going to give you the highest possibility of success. That's what's going to give you multiple confluences. And that's what's going to be able to give you the confidence to be able to not just see what's happening, but to actually act. So, system perspective. What's a system perspective? System overview. You need to let your lists speak to you, right? So what does that mean? Every single week, you should be screening for potential candidates. You should have a specific criteria that you're looking for in those candidates. That is going to build your universe list. From there, you should have a specific list of setups that you're looking for and a specific criteria for those setups. That's going to make your trade ideas list. Then from there, you're going to narrow it down further and further, and you'll be able to get an in the neighborhood list, stocks that are getting there, a focused list, stocks that are imminently ready, and then the best of that focus list. That's what's going to be your action list. Those are going to be the stocks that you are going to actively trade. I personally also like to look at sector leaders. Sector leaders are the stocks that are in leading sectors that are also leading their sectors higher. I want to keep tabs on all those things. And those are things that, again, we can all observe happening in real time. So that way, we're not just listening to what they say. We're not like this, trying to decipher what others are saying, what's happening on the news, what kinds of numbers can we crunch. No, we could just simply observe. We could see this stuff, but we could also observe what they're actually doing. And in looking at the market and observing what they're doing, that's how you can take advantage of it. And finally, your personal performance. Your personal performance, if you've done the other steps correctly, should be the tip of the spear. With a disciplined approach that consists of only taking the best trades and managing those trades based on your set of rules, you should be able to gain the deepest insights into the market and how the market is behaving and the steps that you should be taking. Should you be scaling up? Should you be pulling back? What should you be doing? It's going to be a little bit different for everybody. If you approach the market in a disciplined way, you will have the tip of the spear in your hand. So by combining these three, it allows you to be dynamic. It allows you to adjust in real time. It allows you to be fluid, fluid like water. What questions do you guys have? Question coming in from Instagram. How can I personally teach you this? Do I have some kind of a service? Yeah, I do have a service. I actually have a couple of different ways to help you with this. So, for those of you that already know what you're doing, you want to save some time, you want to screening and all that stuff, it sounds great, but you want time savings. What you want is Mara Elite Research. I share everything that I'm doing, thinking, planning, screening for with our subscribers here. All the research and planning is done for you. Daily and weekly reports, detailed trading plans, curated watch lists, historical market logs, all of this, and it's right there. And that's the first way that you could work with me. If you want to work closer with me, if you want to join our group, if you want education, if you want to learn how you could do this yourself, we have a premium service where we meet twice a week. In fact, we're meeting tomorrow. We're meeting tomorrow morning to go over current markets, current trade ideas, discuss, well, not just what I'm seeing, what some of the other members are seeing, and why. Your chance to ask questions, go through our Mara University, get lessons that can help you get to the next level, interact with our other coaches and our other community. Here's another question that just came in from Mike Angelo. I can't tell whether my strategy isn't working or it's just not the time for right now. How do you tell? One of the ways that you can tell is by executing consistently. It's when we begin deviating from the path, when we're starting to try all sorts of different things, that it makes answering this question of how can I tell if it's me or my system or what it is, that makes it that much more difficult. If you're starting out, it is difficult. I remember questioning if it's me or the system or what it is. When we're first starting out, I feel as though it's important that we do not start from scratch. None of us need to start from scratch at this point. There's so many ways to actually go and make money in the market that we don't need to just come up with our own thing, right? We don't need to reinvent the wheel. We could see what's out there, see what we like, see what makes sense to us, and then go and learn from that person and then start to implement ourselves, work with whoever that person is, ask that person questions. Am I doing this right? Well, what do you think of X, Y, and Z trades? What do you think of this market? And then that's how you'll start to learn. You need an apprenticeship. That's why I built this. That's why I built the premium program, so that way you could work directly with me, work with our team, and not feel like you're alone in the desert. You can do this. Having somebody by your side is going to help you tremendously. Thank you, Mike. These are the golden nuggets for you. I'm glad. You're welcome. Okay, wait. Hey, Mike, do you have suggestions on reducing drawdowns? Yes, I do. And what's the learning? What's the meaning of progressive exposure? Thanks. Well, you hit the nail on the head right there with progressive exposure. Progressive exposure is the answer to reduce your drawdown. So, what is progressive exposure? Progressive exposure means that you will be putting more money to work as you're doing better. When trades aren't working out, where you're getting stopped out constantly, when you're losing money, that's when you start to scale down. You want to be trading less and less and less capital when you're on a losing streak. Everybody has losing streaks. Even if you're the guy, even if you're the guru on YouTube that says that, oh, I have a 90% win rate. Guess what? Over 1,000 trades, there's still going to be a losing streak somewhere in that 90% win rate. Everybody has losing streaks. And if you are betting heavy during a losing streak, guess what? You're going to blow up. That is why we not only need to pay attention to the general market, right? That's where this whole presentation comes in. Right? Get this back on the screen for a second here. That's where this comes in. The personal performance. We don't want to just look at the general market. You don't want to just look at the stocks that are setting up. You want to look at your personal performance. And the reason why you want to look at your personal performance is because it's going to help you with your exact question, Jadway. It's going to help you figure out, should I be betting heavier? Should I not be betting heavier? If you're using your personal performance as a gauge of the market, then it'll help you adjust in real time. The key here is to have a disciplined approach. You don't want to just be taking trades all willy-nilly. You want to have a systematic approach where your setups are all clearly defined. You know exactly what you're looking for. You know how to tell one that's good from one that's not so good. And you're disciplined enough to only take the ones that are good. If you take the ones that are good and they do not perform, then that's telling you something very important about the current market environment. Should you be betting heavy if the best trades aren't doing well? No, of course not. Then you put some more trades on. They start to do well. Then guess what the market's telling you? It's telling you that you found the fertile ground, time to start planting. And that's when you start to bet a little bit heavier and you adjust and you become dynamic and you do all that in real time. Next question. Did you ever set profit target per years? So when I'm thinking of certain targets that I want to try to hit, I'm thinking more in lines of perhaps historical averages of what I'd like to hit if I know if I'm on track or not. But it's less important than adhering to a set of rules and being able to adjust dynamically. You need to. So let's just say, for example, I live in New York. Let's just say that I wanted to go to California for God knows what reason, right? I'm not a huge fan of the politics there. But let's just say that I wanted to go to California. And let's say that I knew that I needed to head west. That knowing that I'm heading west is how I would equate having a specific target for annual returns. You could far exceed your annual return, what your expectation was. You could be on par, you could be under par. You could know when you tend to get the bulk of your gains, what type of market conditions you need to get for the bulk of your gains. You don't know perhaps what the market is going to give you this year, the coming year, what the market is going to give you in the coming month. I don't know what the market is going to do tomorrow. What I'm focused on is what's in front of me, right? So just like how I'm driving the car, let's say I'm starting out, I'm driving the car from New York to California. I know the destination that I want to get to. My focus is not on the GPS and seeing, oh, there's California over there. I'm focused on the road in front of me. And I'm using that overall goal, if you will, to make sure that I'm on track. Let's see, what other questions do we have coming in here? Thanks, Mike. I've heard that every Friday we should close losing trades. Do you recommend that you do that? I try to cut my losers as quickly as I possibly can. For example, I just put on a few trades today. Right now, let me show you some of the trades that I put on today. These are all trades that I put on this morning. Right, so I put on this one here. Actually, why don't I go down to a 30-minute because this was how I was managing it this morning. All right, so this little gray line right there, if you could see it, let's share the screen. That would be helpful. If you could see that thin gray line there, where you have the difference between the red and the green, that is where I entered. That whole red section, that's where my initial stop was. And by 9:30 this morning, a little after 9:30 this morning, or no, after 10 this morning, after about a half an hour of trading, I raised my stop up from here to there, right? Cut my risk in half. Same thing with this one. My stop was down here in PHM. Price broke out, started to run, raised my stop up to today's low, and reducing my risk to almost nothing. Same thing with this one here in IR. Broke out, volume okay on the breakout, moderate volume on the breakout. Raised my stop pretty close to break even. TDG, I haven't raised my stop yet, but it looks like it's getting ready for me to be able to raise my stop up fairly close to break even. My objective in the beginning of every single trade is to get my risk off the table as quickly as possible. What that's going to do for me is that it's going to allow my winners to be able to run without having weights tied around their neck. If I have a bunch of winners and they need to dig me out of a hole, then it's hard for my portfolio to gain any kind of traction. I would much rather take a bunch of break-even trades and have a handful of winners than to have more winners and then have more losers on this side and end up flat. Right? If I have very small losses or break even, I'm talking 0.5% loss, and let's say I have a 10% gain, I could have how many losses? I could have 20 losses of a 0.5%, and 1 10% gain will make up for all of them. That's why I like the idea of getting my stop to break even as quickly as possible. I don't like having risk on the table. Question from Daniel. How do you decide when a stock has more potential worth holding for a bigger move or selling partial into strength? Also, what is your level of strength? 2R, 3R. Very, very good question here, Daniel. So, Daniel, here's how I decide when a stock has more potential. The way that I decide if a stock has more potential is when the stock itself proves it. When the stock moves into profits, right? So let's pull up the charts again, and I'll show you some of the more recent bigger winners here. Right, so here's Zscaler, right? Zoom in on this, and I'm actually going to take off my annotation so that way hopefully you can see the chart. Actually, looking at this, I don't think that it's that bad. If you think that it's that bad, type into the chat, let me know. But it doesn't look that bad to me. So I entered this one over here, I took some scale outs at 5%. My average gain has been roughly 10%. So I like to take a little bit off the table at 5. In this case, 5 is about 1 times my risk. I had risked about 5% initially on this trade. So I'm taking a token amount off, getting my stop to break even very quickly. Then it gets to my average gain over here. And so I'm taking more money off the table when it gets to my average gain. Then after that, this thing has proved itself. It's proven itself because it's made me money. Therefore, I'm willing to give it a little bit more leeway. Not only has it made me money, not only has it moved into profits, but I've also taken some profits off the table. And so because I'm not risking all of my profits, because I'm not risking my initial risk down here, I have the ability to let it run further. I have the confidence to let it run further. And I've defined how I want to do all this well in advance, right? Like it's not where I'm just looking at this and deciding, well, I'm going to let it run today. No, all that stuff is all pre-planned. So it reports earnings, right? On this day, I'm up 10% on the position and it's getting ready to report earnings. I decide that I'm going to hold the rest of the position. And the reason why is because I've already taken half the position off the table and my stop is already at break even. This thing has earned the right to be held. So I hold through earnings, and guess what? After hours, it's down about 7% if memory serves correct, maybe even 8 or 9%. And that would have brought me all the way back to my break even. All right, it is what it is. Sometimes that happens. What happens in the after hours, right? And we're deviating a little bit, but I think that it's worth it. What happens after hours does not always reflect what happens during the actual trading session, during the day. This ended up gapping down 5%, not the 9% that it was after hours. Gaps down 5%, tests the 21 EMA, that purple line right there. Tests it and bounces. Bounces the rest of the day, closes at the high of the day. I'm still holding it. Why am I holding it? How did I have the confidence to hold it? The reason why is because it's made me money. And it's held above all my other plans. I had a stop loss down here, right? So this is, I'm not at risk of taking a loss on this trade. Let me know if that helps you. Here's the next question here from Mike Angelo. You don't find you choke your trades by raising your stop so tightly? Sometimes I do. Sometimes it ends up choking a trade off. However, there is a very famous saying, and the saying goes like this. The saying says that winning horses typically don't back into the gate. Every once in a while, you'll get shaken out of a potential winner. That happens. What I've observed is that my best trades will work immediately and keep on working. Those are the ones that I want. I don't want to sit with the, oh, maybe this is going to work. Maybe this is maybe I'll give it a little bit more room. I'd rather get out very, very quickly, get out at break even, get out with a tiny 0.5% loss, and then have other trades like this one here. All right, so let's look at the 30-minute on this one. Here's where I'm getting in on that breakout. All right, got to share the screen again. Got in on this breakout right there. It never threatens to undercut the daily low. Comes in a little bit there, and then boom, off to the races. Here's another big winner, Datadog. Right, so Datadog trips the breakout, Trades flat. Never undercuts this low over here. I believe I had my stop somewhere down in this vicinity for a little bit. Then rallies. As soon as it's rallying like this, I'm moving my stop to break even. And the reason why is because winning horses typically don't back into the gate. If they do, then it's a sign that perhaps something is wrong. If they do back into the gate, and I am stopped out at break even, and let's say that they do take off, guess what? I could always buy back. The idea is to risk as little as possible and allow ourselves to be open to all the upside. Let's see, what other questions do we have? I'll scroll through Instagram here for a moment. Someone just asked, I am doing trading for the last 4 years, but I'm not getting consistent results. The reason, well, there's a few things to look at. One, what you want to look at is, are you executing in the same way all the time? That would be the first thing that I would look at to see, are you trading consistently? Because sometimes it might be the market environment, right? Not every system is going to, or actually, I should say that no system works all the time. Every dog has its day, as they say. But the only way that you'll be able to have your day is by executing consistently. And executing consistently does not mean that you're taking the same exact trade with the same exact size every single time. What it does mean is that you'll adjust dynamically. Remember, hopefully you were able to tune in and see some of the presentation over on YouTube or on Rumble, because we had a great slide deck there that really explained this. And you want to look at the market through a three-dimensional lens, through the general market, through your system, and through your personal performance. And that, doing it in that way, is what's going to allow you to be able to have progressive exposure, where you'll be able to bet a lot heavier when the conditions are ideal, and to be able to scale down rapidly when they're not. So I hope that this was helpful for you guys. Sign up for our free newsletter over on marawealth.com. We have a lot of free education. I put out my trade ideas list each week in the newsletter for free. If you want more information, or if you want to work with me, we have several services that you can check out over on marawealth.com. That's it for today. It was great seeing you guys, and I'll see you again next week. Take care. Much love. Peace out, everybody.